Hey everyone, welcome back. We are going to go over some of the basic definitions. And when I say basic, they're basic for all accounting. So we're going to use these the entire semester. You're going to hear these referred to oftentimes throughout your lifetime or in your business career. So we'll really want to make sure that we get these down because they are going to be a part of your world. So if you don't know them already, here we go. So this is the accounting equation. We're going to use this the entire semester. The accounting equation is assets equal liability plus stockholder equity. So in financial accounting, if something has an impact on this equation, it is going to be something that we have to record in our financial statement. So if it has an impact here, we've got to report it to anyone wanting to know about our company. So what the heck are these things? Assets. Think, yourself. What kind of assets do you have? When you hear that term, what does it mean? Most of you can probably come up with something that you think of as an asset to you. Maybe it's a great hairdo. No, but in terms of business, we're thinking from a financial standpoint. So money in your wallet, in your pocket, in your purse. If you have a checking account, you've got a balance in that, a savings account, a CD, some sort of investment account, that is a resource to you. That would be an asset. So things like cash, investments are assets. Other things that you might think of as an asset, maybe some of you have a car, truck, some sort of vehicle that gets you from place to place. That would be an asset to you. Companies would be the same way. If they have a vehicle, if they have equipment, those would all be assets to a company as well. Some of you might have a computer or furniture or something like that. That would be an asset. Those would be assets for a company as well. So typically from a business standpoint, we'd refer to that as property, plant, and equipment, things like computer equipment, or maybe like manufacturing equipment, or construction equipment that we use in our business to help generate income. So resources of the company, that's a definition of assets. So very similar on a personal level to what it would be for a company. So those are assets. So assets are one side of the equation. So the other side of the equation, you can think of that maybe in terms of, okay, I've got all these assets over here. I've got money, I've got a computer, I've got a car. Well, how did I get those things? Did I earn some money and I used that money to buy the assets? Did I have to go and get a loan at a bank? Did mom and dad give me money? How did I get those assets? So the first, liabilities, that's first on the equation list. Liabilities would be from the standpoint of you went out and you got a loan. So you borrowed money from the bank to purchase your assets or to do something with your business. So the official definition is creditor's claim to your resources. So if bank loaned you $100,000 to open up a new store, then that creditor, the bank, has a claim on your store, on the resources of your company, okay? So that's a liability. So most of the time it's gonna be notes, which is another word for loans. So maybe you have a student loan, maybe you have a car loan, maybe you had to get a loan to buy that computer. Those would be your liabilities. Companies, it's going to be something similar. The last one is stockholder equity. So what if you had earned some money and you put that money into your own assets? So that would be stockholder equity or owner equity. So it's your claim on the company's resources. It could be what you put in. Also, it can be what shareholders have put in. Maybe mom and dad gave you money, so they are providing the equity to get going. So with a corporation, it's that you sold shares of stock to investors. So now they're owners or stockholders, and they helped you to get those assets, get started, and they've got a claim on those resources. So that's the equation. You've got assets on one side, liabilities and stockholder equity on the other. It is an equation. So to stay in balance, whenever we have a transaction, if something happens to assets, then something else has to happen. So it's an equation that has to stay in balance. So if assets go up, maybe liabilities go up. Or if assets go down, maybe something in stockholder equity goes down. So it has to stay in balance. There can't just be one thing that happens and throws it all out of balance. So keep that in mind as we go through like all of our transactions down the road. So that's the accounting equation. You need to know what assets, liability, stockholder equity is. You need to know that accounting equation. Okay, some other definitions. I'm flipping to the next slide, so don't worry, we'll come back to it. So we've done asset, liability, stockholder equity. A couple other things to make note of: revenues and expenses. Oops. So revenues, that is, you know, think of any business. What is their revenue source? So think of someone like Target, Walmart. What's their revenue source? They sell things to their customers. That's their revenue. Think of someone like Subway, Buffalo Wild Wings. What's their revenue? They're selling you food. That's their revenue source. It can also be service companies. So think of attorneys or accountants. They're providing a service to their customer. They're charging them for that. Customers pay them. That's their revenue source. So that is revenues. Here's the official definition. All these definitions are in the book. They're in the slides if you want to print them out. Okay, expenses. So you've got these revenues. Your Buffalo Wild Wings, you have revenue when you sell food to your customers. What are some of the costs that you have in generating that revenue? Well, you had to buy the food yourself. So you're going to have what's called cost of goods sold. You have to pay a cook, wait staff, people to wash the dishes, salary expense, wage expense. You have to have the restaurant. You've got to have utilities at the restaurant. Maybe you're paying rent for the space. So what are your costs of providing those sales? Those are your expenses. So rent expense, utility expense, salary expense, all of those things, all those costs that you have of being in business are known as expenses. And then we're going to go over net income and dividends a little bit later. So I'm skipping those for now. But these are some main definitions that you're going to want to know the entire semester. In class, we're going to go over brief exercise 1-4 that does some account classification. You're also going to see that in your practice homework. And obviously there's an exercise in your homework about being able to identify, you know, which item they have listed as an asset, which one is an expense, things like that. The other thing I wanted to point out to you is in your textbook, let me get to the right screen here, in your textbook. So this is the ebook, and where you would find this is when you're in the ebook and you go to the table of contents. So after all the chapters, if you come down here, there's something that says end sheet. And I am on the representative chart of accounts. So when you have a book in print, this is the very last thing you see before you shut that book. Anyway, this is a wonderful resource to use. It gives you assets and it lists out all the different assets that a company may have. And obviously we're going to be talking about all these different ones throughout the semester. They list liabilities and all the different types of liabilities a company might have. They talk about stockholders' equity and all the things that make that up. Obviously we'll talk about those more as well. Revenues, here are all the things that go into revenue, which we'll deal with later. Expenses, here are all the things that you might see as an expense. But this is just a good resource to refer back to if you're not feeling comfortable yet with classifying what's what. You can always refer to this representative chart of accounts. That is all for now. Next couple of slides, one's going to go over the income statement, statement of stockholder equity, and then a balance sheet.